David Burrows from Barometer is here. Hello again. I'm Michael Hainsworth in for Andy Belt. We're talking North American large caps at 1-855-326-6266. You can tweet us. You can tag us on Facebook. Or if you're a little shy about all of that, you can send us the old-fashioned high-tech way. Email marketcall@bnn.ca. Suzanne has emailed into you on the iPath Bloomberg Coffee Subindex Total Return ETF. The Joe. Cup of Joe? Nice. Wants to know what your opinion is.
You know, it's amazing in the ETF world today, you can really get exposure to virtually anything. We run a global macro portfolio that invests across all asset classes, long or short. And, you know, this is obviously in the agricultural space. If you look at the longer term chart of coffee, it made a turn back in about March. Higher and really had a pretty good lift from $17 to about $26. It's pulled back recently into support at about 21. Certainly a good sized pullback. But in general, the commodities are improving. We're seeing some strength across a whole bunch of different groups, including, certainly some of the metals. So I think that you could buy it here. I think it looks okay. We don't have any current agriculture exposure in the portfolio.
Would you really want to be exposed to the commodity itself, or do you want to be more exposed to the companies that would be taking advantage of coffee pricing?
Look, there's lots of different ways to play this. We have owned Starbucks in the past. We don't own Starbucks currently. The restaurant group is getting better, but Starbucks just really is not quite there right now. It's made a bit of a turn. I'd like to see it take out the highs sort of in the mid-60s. But you know, look at the idea behind some of these ETFs is that you can build baskets of securities that give you really broad diversification and low correlated assets, meaning assets that behave differently than the rest. And it doesn't have to all be in equities right now.
All right. Thank you very much for the email. Let's go off to the phone lines in Vancouver. It's Jerry. Good morning, Jerry.
Good morning, gentlemen. David, can you give your view on Teck Resources? I've just broken even on it after a few years of holding it. Would you continue to hold it, or would you think it'd be wise to get rid of it right now? And Michael, can you give us a street consensus on Teck right now?
You bet.
Sure. So, Jerry, you know, you make a good point. They call these stocks cyclical for a reason. They certainly ride up and they ride down. Teck had a very long decline over the last couple of years, really going back to 2011. So let's look at it as it is today. 2/3 of Teck's EBIT comes from met coal. Met coal prices for this upcoming year have settled about 40% higher than they were midway through 2016. Chinese steel production is picking up. They're restarting some of the plants. We're seeing better global growth in many areas of the world. And Teck is a big winner as met coal prices go higher. So we are long the stock. So I'm speaking from a long position. It's, you know, certainly it can pull back. It's had a great run from about $2 to where it is today. But I think that actually there's probably some more room to go. The key in this market, though, is that we are in a market where there is broad sectoral leadership, meaning there's lots of places you can target. As Canadians, I would argue we don't want to be too concentrated in the things that we're used to being in.
I wonder if there's a cheap entry point here if Jerry wants to add to his position, because the technicals are rolling over. The MACD is still positive, but the momentum is way down, and it's broken support.
Yeah, no, I don't see that. What I would say is that you should expect it's sitting right on the 50-day moving average. And what I would say to you is that realistically, in the market that we're in, we're going to get these short, sharp little pullbacks, but you shouldn't expect big pullbacks. When I look at KOL, which is the ETF for coal itself, broad-based coal. If you look at DBB, which is the ETF for the metals group, if you look at SLX, which is the ETF for steels, they've all pulled back a little this week. They're technically sound, and you have to give them the benefit of the doubt they're going higher.
Jerry, street consensus, $37 12 months out, suggesting a 28% total return over the next year, including that modest third of 1% dividend. Thanks for the call from Vancouver. We're off to Saskatoon. Carl, thanks for holding.
Thank you for taking my call. Season's greetings to both of you, and Michael, to your colleagues. David, I would like your opinion or thoughts on taking a position with Johnson & Johnson for a long-term hold. Thank you very much.
Sure.
Bye.
Thank you.
So, Carl, this plays into a very interesting discussion because as we saw the pickup in the financials, which were really underowned by institutions, and the pickup in industrials also really underowned, portfolio managers and investors looked at their holdings to say, what could I sell? Because there wasn't a lot of new money coming into the market. And so you saw a lot of the leading technology stocks, you saw a lot of the leading healthcare stocks sell off. Now, in the last 2 weeks, we're starting to see net flows into equities, which realistically could be the beginning of what that great rotation people talk about, the over-ownership of bonds and under-ownership of equities. And that's starting to float some of the previous leading stocks, like a Google or like a Amazon or like some of the big cap healthcare stocks. So I would say that from a timeliness perspective, healthcare is not one of the leading groups right now. They have been seeing tax loss selling. I think that we're getting toward the end of that. And some of these lagging groups are starting to bubble up underneath. So J&J is a great quality company. We don't own it currently. We do own some Merck. And actually, for a tax loss bounce, just recently added some biotech exposure.
Carl, thanks for the call and for the kind words as well. All the best for you and yours in the holiday season, too. David Burrows is here, President and Chief Investment Strategist at Barometer Capital. We're talking North American large caps. Got a question? We got a line open. 1-855-326-6266. We're back in a flash.